In 1997, the world's largest gold deposit was worth $6 billion, until geologists realized they were looking at salted rock and a forged core sample. The accepted story is simple. A small Canadian mining company found an enormous gold deposit in Indonesia, got caught faking the numbers, and collapsed. Investors lost billions, case closed, but that narrative misses the real decision, the one made by a geologist named Michael de Guzman at 7 a.m. on March 19, 1997, standing on a helicopter pad in the jungle. Let's start with what everyone thinks they know. Bre-X Minerals was founded in 1989 by David Walsh, a former financial analyst with no mining experience. In 1993, the company acquired exploration rights to a property in East Kalimantan, Indonesia, a remote jungle concession called Buseng. The land was worthless to everyone else. Then in 1994, Bre-X announced a discovery. Small at first, but the numbers grew year after year. The estimated gold content climbed. By 1995, it was 30 million ounces. By 1996, it was 70 million. By early 1997, Bre-X claimed Buseng held 200 million ounces, making it potentially the largest undiscovered gold deposit on Earth. The stock price exploded. Bre-X went from trading at pennies to $280 per share. At its peak, the company was valued at $6 billion. Investors lined up. Major mining firms circled. The Canadian press called it the discovery of the century. And that's where the first decision point matters, not the fraud itself, but why smart people believed it. The core samples looked real. Bre-X employed geologists who said the numbers checked out. The Indonesian government approved the project. Major firms Placer Dome, Freeport McMoran were ready to partner. From an investor's vantage point, with the information they had, the bet looked rational. They were wrong, but not stupid. Now here's where the structure cracks. In 1997, Freeport McMoran insisted on drilling its own independent holes to verify the deposit before committing real money. Michael de Guzman, Bre-X's chief geologist, knew what those holes would find. He knew because he'd been salting the samples himself, mixing gold dust into core samples to artificially inflate the assay results. On March 19, 1997, de Guzman got on a helicopter to visit the Buseng site. He never landed. He fell from the aircraft at 800 feet, either jumping or pushed. Nobody will ever know. His body was found 2 weeks later in the jungle, partially decomposed. The official cause, suicide. But the decision that matters happened before that death. De Guzman wasn't acting alone. The fraud required someone above him, someone who saw the numbers, approved the sampling protocols, and signed off on the assays. That someone was David Walsh. Walsh faced a choice under pressure: admit the deposit was much smaller than claimed, or let the samples speak for themselves. Walsh chose to let the fraud continue. He didn't create the salting scheme, but he benefited from it enormously. His stake in Bre-X was worth hundreds of millions. Selling early would have triggered questions. Staying in meant riding the bubble to the top or riding it down. When Freeport's independent drilling results came back in May 1997, they found almost no gold. The assays showed a deposit of perhaps 1 million ounces, not 200 million. Bre-X's stock collapsed from $280 to $0.50 in weeks. Investors who'd bought at the peak lost nearly everything. The total destruction, $6 billion in market value. But here's what the standard narrative gets wrong. This wasn't a con by an outsider who tricked the system. This was a con by someone embedded inside the system, someone whose incentives were perfectly aligned with the lie. Walsh wasn't a criminal genius. He was a rational actor responding to the pressure of a stock price that kept rising. The real explanation sits in the incentive structure itself. Bre-X was a penny stock that became a blue-chip dream. Every stakeholder, geologists, executives, brokers, analysts, journalists, had a reason to believe the numbers were real. Believing cost nothing. Disbelieving meant admitting you'd missed the biggest story in mining. Regulatory bodies failed to catch it. Due diligence failed. The geological community failed. Why? Because the fraud was small enough to hide in the noise of normal exploration, but large enough to generate profits for everyone touching it. A geologist who questioned the samples faced career risk. A broker who warned clients faced losing deals. David Walsh faced bankruptcy charges after the collapse. He was acquitted in 2007 on grounds that the salting was orchestrated by subordinates without his knowledge. That verdict remains controversial, but the legal question misses the strategic one. Walsh made a decision to not ask hard questions when asking them would have cost him billions. The scandal destroyed individual fortunes. It also exposed a structural weakness in how markets price information. When everyone profits from the same lie, the lie becomes harder to see. The $6 billion loss wasn't the cost of fraud, it was the cost of a system where truth and profit temporarily decoupled. Bre-X collapsed in 1997. The Indonesian government launched investigations. Dozens of investors sued, some recovered cents on the dollar through settlements. Michael de Guzman's death remained officially a suicide. David Walsh lived quietly until his death in 2012, his reputation destroyed but his legal culpability never proven. The lesson isn't that markets are irrational, it's that markets are perfectly rational given the incentives they face. When discovery is worth $6 billion and skepticism costs you the deal, you stop being skeptical. Every actor made a logical choice. Together, they created a catastrophe that was entirely predictable and entirely preventable. Bre-X stands as a reminder that the biggest financial disasters aren't orchestrated by masterminds. They're enabled by ordinary people making rational decisions within broken systems. The fraud was discovered. The perpetrators faced consequences, but the structural incentive that allowed it to happen in the first place, that remains. Subscribe to see how these incentive structures repeat across industries. There's a new corporate collapse every month, and they all follow the same pattern.